This is Chad Stayskull with Eagle Wealth Management. I'm here with our educational economic update for December 2017. In this month's video, I'd like to discuss some of the major headlines that influenced markets in November. I also am going to try to provide some insight in what these developments could mean to you as an investor. Let's start with the stock market. U.S. equities had quite a month in November. By the 30th, both the Dow and the S&P 500 had hit new all-time highs. The Dow rose above 24,000 for the first time ever. The S&P 500 also marked its longest run of monthly gains in a decade. Throughout the month, we received a variety of economic updates that helped support this performance. As October's data came in, many reports indicated the economy is still growing. For example, the housing market showed strength. Existing home sales beat expectations. The latest reading of new home sales also came in far above the anticipated results. The numbers were higher than we've seen since 2007. In addition, consumers spent more in October as well. Their incomes also rose. This growth should be positive news for the economy. Consumer spending comprises about 70% of U.S. economic activity. So higher spending, it means stronger economic growth. In fact, the latest reading of gross domestic product, or GDP as it's often referred to, revealed the economy is already picking up speed. During the third quarter of 2017, GDP grew by 3.3%, the fastest pace in 3 years. Experts believe economic growth may slow slightly in the fourth quarter, but they still think GDP readings could be at that 3% level. How much consumers spend during the holiday shopping season will largely impact the last quarter's growth. But with low unemployment and increased incomes, we could experience some pretty high spending levels. Looking back on November, consumer behavior and new economic data are not the only topics that moved markets. One critical detail is tax reform. The House and Senate each released their long-awaited bills, and the market has reacted to the key differences between the two. In particular, the Senate's proposal to delay corporate tax cuts until 2019 contributed to a stock market sell-off earlier in the month. Then, by November 30th, the markets hit record highs as Senator John McCain's support of the bill seemed to increase the likelihood of its passing. As of now, no one can really say if the Senate and House will be able to come together to create a compromise tax bill that each can pass before year's end. Expectations for tax reform have pushed stock prices up in the U.S., but uncertainty over whether the promised changes will actually happen is affecting both market performance and consumer sentiment. As the tax debate continues, December should provide a lot of new information for the markets to digest. Also, many analysts expect the Federal Reserve to raise interest rates this month. This interest rate rise would be the third one in 2017. We're going to continue to monitor these and many other economic details in the coming months. As always, we welcome your questions and anything covered in this video or anything else you may have questions or that's on your mind. Well, that wraps up our educational economic update for the month of November 2017. Please remember, nothing we talk about here is a recommendation. If you'd like to discuss your personal situation, please feel free to give us a call at 541-330-0220. We're happy to talk. Once again, this is Chad Stayskull with Eagle Wealth Management, signing off for the month of December 2017. Take care.